morning, everyone. Welcome to the Adelaide Office Leasing Market update. Today, the LPC advisors will be giving you an overview of the Adelaide office market and focusing on the opportunities there are to future-proof leasing arrangements. And so to kick off, we are going to just introduce the presenters. We've got Julie Thomas, who's Director of Adelaide, our Adelaide LPC, and Adrian Gerber, who's Director of Melbourne LPC. So today we will focus on the Adelaide CBD market, which has significant opportunities for tenants due to high vacancy. We will take you through market news, vacancy data, supply pipeline, and then discuss the status of the office market trends and some insights into strategies LPC has been advising our office clients in order to take advantage of the market. So now Adrian will touch on some market news and provide an overview of Property Council of Australia's vacancy data.
Thanks, Hayley. So to kick off, I'll touch on some key recent articles from the Australian Financial Review on the national office sector, highlighting some of the trends we're helping our clients navigate. So for office, workplace utilisation has increased as employees return to the office for multiple reasons, including the tightening jobs market, wanting to keep home and work separate, and also the fear of missing out. Seeing others return is a catalyst for others wanting to return to the office. In Melbourne, like other markets, B-grade stock is not being looked at by tenants, highlighting the continuing trend of flight to quality. Julie will touch on this further when we get to the office section. We move to the next slide. So from a South Australian perspective, the South Australian state government has all but issued a mandate to encourage full office attendance, expecting public servants to work from an improved office space. Another article discussing a shift to net zero discusses the gap in vacancy rates occurring from a shift in demand for tenants requiring buildings with sustainability accreditation of 5.5 NABERS stars or higher. And then similar to Melbourne with the flight to quality, the Adelaide office market rebounding as tenants move to CBD. This discusses how the drop in vacancy has been a result of an ongoing trend for centralisation of suburban offices into the CBD. Whilst a positive headline, it should be noted that vacancy is still at a historic high, with vacancy rates not seen like they are since the 90s. We move on to the next slide. So this slide shows vacancy data across the country and also highlighting the Adelaide office market. So coming off the back of a record high of 19.3%, Adelaide CBD vacancy rate has reduced slightly to 17.5%. Melbourne has now replaced Adelaide as the highest vacancy city with 18%, closely followed by Perth with 15.5%. The main drivers for this reduced vacancy in Adelaide is a slowdown in supply together with positive net absorption as fringe and suburban tenants centralise into new CBD headquarters, as detailed in the article on the previous slide. Exploring Adelaide's CBD vacancy further, you can see that the new premium assets are quickly being taken up, creating larger burdens of vacancy in the A and B grade offices. From an overall Australian perspective, CBD office vacancy has remained fairly stable, increasing from 13.5 to 13.6% nationally as of July 24, with non-CBD areas having recorded a slight reduction from 17.9 to 17.2% vacancy. If we move to the next slide. So this slide illustrates the difference between lease norms and market conditions. This barometer is used by LPC to demonstrate where each barometer sits within each sector. So looking at the office sector, the lease norms are typically drafted in favour of the landlord due to supply side landlord power. The ongoing challenge for tenants in this market is to push the boundaries and change the lease norms. This involves placing a greater emphasis on clauses that are typically given little less consideration by a tenant, which includes the transfer of risk, obligations, and guarantees back to the landlord. With market conditions, given the high vacancy rate across the sector, the market conditions are in favour of tenants, which is largely driven by the slower return to work and tenants right-sizing their space requirements. With this in mind, this does present tenants with an opportunity to leverage market conditions and change the lease norms via restructuring and other strategies. So in summary, with the office sector, lease norms favouring landlords due to supply-side consolidation, focus and power, whilst with market condition on the back of high vacancy rates, there is an opportunity to use market conditions to change lease norms and individual accommodation arrangements via restructuring and other strategies. I'll now pass over to Julie, who will explore the drivers behind the Adelaide market further.
Great, thanks, Adrian. So following on from Adrian's comments about high vacancy, one of the main drivers for the increased vacancy has been recent spate in office developments. And so these are largely premium office buildings that we haven't seen in the Adelaide market previously. So over the past few years, Adelaide has actually seen a 10% increase in the total office space available. And so that has really put some pressure on the vacancy figures as there's a shift towards flight to quality from tenants moving to these premium class assets. That's creating some further vacancy in A grade, older A grade and B grade. And so we're seeing supply now moderating, and that's a trend that's going across the country. So there's 20% lower supply recorded nationally. And this is mainly due to funds and investment firms diverting their investment funds towards different asset class than property. And here the slide represents the few office developments that will come out of the ground over the next few years. 50 Franklin Street is well underway. It's estimated to be completed around Q4 2024 or early 2025. And there's a couple, the other 3 developments that are listed. The Entrepreneur and Innovation Centre is in lot 14, sorry, which is the old hospital precinct. Market Square is over the Central Market precinct, and Festival Tower is in the Riverbank. These developments have been driven by government land partnerships, and so they are slightly out of pitch off of the CBD, but all sort of represent sort of opportunities to be part of a different precinct than just the CBD. With those supply opportunities, there is some timing lag. And so we're seeing a number of property owners and developers in the CBD look towards the A-grade buildings in the city that are a bit older and refurbish these buildings. So we're getting some really good premium level opportunities within the CBD area. And these come at slightly cheaper rents than the new builds as well. So moving to the next slide. So what's driving Adelaide tenants? What's motivating them? So we're seeing increased demand across the office markets, and some of this is coming from centralisation. And so that's the amalgamation of maybe a number of suburban sites that aren't getting tenanted, like people aren't attending those offices. And so companies are reviewing if their assets and their suburban assets are actually being utilised, and then maybe reassessing whether they come into the CBD, take advantage of really good deals at the moment, a tenants market, great incentives, and trying to find a central location where they can provide their staff a sense of identity and amenity and I guess occasion to get your staff together and bring them into the office that way. It's a tool to sort of drive attendance in reality. So the other thing to note about that is that we're also finding suburban tenants and fringe tenants are actually reviewing whether they actually need the car parking that they thought that they always needed. With people shifting the way they work so that they know that they can work remotely, it's not becoming as relevant to have a car park. And so moving into the city becomes a better option, I think, or has less resistance anyway than it was before. And so the flight to quality continues. I'm sure you've all heard this phrase 100 times. And so we just in Adelaide, we've just never had the premium quality buildings. And so there's really strong demand for these buildings as they come up. And so we're seeing that they sort of have 1% vacancy as they come out of the ground, the new buildings. And so as they while they're doing so there's high demand for these tenancies, and so tenants are moving quite quickly. And so this is not only for staff attraction and retention, but also to encourage that staff attendance. And the other interesting trend that's come out of data is that we would have expected that businesses would be reducing their size of tenancy when they're relocating or refurbishing and renewing. But 70% of tenants that are relocating have actually maintained about the same amount of space. They're just looking at improved ways to utilize their space. And so this could be increasing the amount of meeting rooms so that your staff can come together and meet when they're in the office. It could be larger, more adaptable spaces for client and employee staff meetings, and they're just generally reviewing and improving the utilization of the tenancy in a way so that it attracts their staff back into the office. So one of the other trends that we're seeing that's influencing office space and how much space people are taking is workplace mandates. And so we'll see before that Adrian mentioned that the SA government has put out a notice to all of their public servants that they expect them to be working from approved offices. And so we expect to see a bit more of that trend come through. And we're aware that some businesses are asking all of their managers to come in as their first sort of step. If it's hard to sort of reinforce something if management isn't coming to the party. And we're also seeing some employers putting in a 50% office attendance ratio. So what else is driving the high demand from tenants and shifts and changes? And so a lot of it is building amenity. And so as I mentioned before, there just hasn't been a premium class of building before. So everyone's been in buildings that are 20 or I think 80% of the stock in Adelaide is 20 to 30 years old. And so it's just a new opportunity to get into a premises that sort of reflects their business, where their business wants to be, and also that opportunity to attract their staff back with that shiny new building. Some of the services and building amenity that is attracting businesses, things like concierge services, end of trip, internal gyms, rooftop entertainment areas with barbecues so that you can have staff gatherings, and shared meeting spaces as well. And so you can see there is some appeal to buildings that have these communal areas that can be bookable and shared spaces so that you can actually reduce your footprint if you like, and to facilitate some of these staff gatherings that are becoming more and more important. And of course, good coffee and restaurants, cafes are also always like critical these days. And so one of the main drivers as well is the sustainability, ESG and sustainability requirements. More and more, it's getting closer and closer for people to get net zero by 2030 and some of these other targets that businesses have. And so we're seeing more and more tenants require at least 5.5-star neighbours rating, but more likely if they've got really high ESG requirements, then it's either an all-electric building or a net zero building. And so, so it's becoming more and more important to check that that your building can meet these measures. If we go to the next slide. So, what I've done here, this slide sort of represents some of the commercial term trends that we're seeing in the market. And so obviously with such high vacancy, there's some excellent incentives in the market. And so Colliers have actually actually reported an increase in inquiry of about 41% on last quarter of tenants, realizing that there's an opportunity they might be able to take advantage of. And some of this is people coming to the market and actually taking advantage of the fit out, or it's using the current market to have a discussion with your current landlord and actually get a good terms on renewals or restructuring your lease early. With limited future supply and high demand for premium assets in central CBD locations, we are seeing some tenants exiting their leases early, with part incentives used to fund lease tails or make goods. And with a general flight to quality occurring due to new supply, there is a strong pressure on landlords in the CBD to provide really good incentives. This isn't as prevalent as much in the fringe markets. But what we're seeing is that the CBD incentives and terms that we're seeing is actually encouraged some fringe and suburban tenants to relocate into the CBD, where these incentives help to offset some of the cost barriers that might have prevented them moving to the city before. And so obviously in these times of uncertainty where, we've had all of our workplace, employers are working from home, and now there's new mandates coming in, encouraging people back to the office. There obviously is some uncertainty about how much space you need or how you use your space in the future. And so we're seeing more and more tenants look at shorter term leases and or at least, a shorter term option renewal periods after their first initial lease. And obviously we're seeing, going back to our barometer that Adrian discussed before, what we usually see is really landlord favoured leases. Because of the market conditions, we're seeing a shift towards some more tenant-friendly lease terms. And so these are things like removing make-good obligations or reducing them, incorporating greater flexibility in rights in the leases, things like early termination or contraction or expansion rights. And we are also seeing an increase in capping of annual outgoings. And some of this has come about because some of the new buildings are coming to the market with outgoings rates that, are pretty average what we would expect to see. And then after the defects period, we're seeing those outgoings increase significantly to around the $200 mark now, which has been unseen before. Can we go to the next slide, please? So this slide talks about some of the commercial terms and just gives a general market commentary. And so I've listed here rents, like typical gross face rents for premium, new gen A grade, old gen and B grade. I guess what we see in the Adelaide market is you've got these new premium assets, which is sort of the brand new buildings, but you've also got new A grade buildings that are older A grade buildings that are starting to refurbish. So there is some price differential, and there's some price differential with the incentives that we're getting. And so for the premium class, it's about maybe 35 to 45% incentives, and A grade older generation stock, you may be lucky enough to get 45 to 50% incentives. The other interesting point that I've highlighted here on this slide is that renewal incentives in the CBD have really increased. There was a day where you wouldn't expect to get any incentives on a renewal in Adelaide CBD, but because so many tenants are shifting to more premium grade, an older building is being much more competitive when it comes to renewal. It's really worth starting the process early so that you can go out to the market, negotiate other opportunities, and use that to leverage a good negotiation with your current landlord, even if you are intending on staying. We can move to the next slide. So this table highlights some relevant strategies that apply to the Adelaide office market, having regard to the current market conditions. For the office sector, our recommendation is to our clients is to focus on the items highlighted in orange, being initially lease restructure before expiry to leverage the market conditions. This means engaging early, and our recommendation to all our clients is to review their long-term accommodation strategy well ahead of their lease expiry. And so this is about not just you know, what opportunities are out there in the market, but it's more about firstly reviewing your business and what your business needs are, and then going to the market after you've got a real plan and strategy for your future property needs. And so the current market conditions present an opportunity to go early and get advantage of some of these. As discussed before, some incentives will help you pay out the lease tail of your previous lease. And it's a good idea with the development, the supply pipeline, you know, the next buildings aren't going to be 2 or 3 years away, but the demand is so high for these opportunities that it's a good idea if you want a chance to get a good property and like the right floor and the right building to go as early as possible and secure those sites and try and take advantage of the incentives that are in the market right now as well. And so the next yellow strategy that we've highlighted is workplace policy review and reset. And we've spoken about this a couple of times during the presentation, that the government's starting to review their mandates on whether you work from home and how much you work from home. And so we would probably encourage all businesses to start to consider if there's ways that they can understand and drive some policy around that, which will help them plan for their property. And so you could like doing things like reviewing what your office utilization and attendance is over the whole week and understand where the hot and cold points are, and adapting those policies to try and help those. Many businesses are using these recent changes that are occurring to actually adapt how their office actually works and functions and is effective. It's also key, as highlighted by the next point, to do your premises due diligence and negotiations. So this is on your existing, this is on premises due diligence on your existing premises is getting really more and more important in the Adelaide office market, as the divide between sustainable buildings and non-sustainable buildings, the gap is really clearer. And so with 80% of the assets in Adelaide 20 to 30 years old, you really need to take a bit more of a closer attention to what the air conditioning and the services and things in the building, whether they're up to scratch. And there's a lot of buildings that are promising to upgrade, that they're working at, you know, they're aiming to get certain neighbours classes. And so making sure that your lease, make sure that it makes the landlord accountable to actually achieve those targets. If you are tied to ESG, if you're tied to ESG measures, then you want to make sure that the landlord is actually doing what they're promising. And this is just the whole marketplace at the moment is just an opportunity for you to really try and extract better landlord commitments to help you future-proof your leases and property. Moving to the next slide. So that finalises the overview of the Adelaide City office market from the tenant's perspective. If there are any questions, we'd love to hear them. Hayley?
Yeah, please feel free to put any questions in the chat or turn your microphone off, and we'll be happy to answer any questions that you have. I'll give it about 30 seconds, and if we don't have any questions, then we'll round up. Okay, I don't see any questions. So thank you everyone for joining us. We we look forward to seeing you at our next update, which is the national overview for Q3 2024, which happens on the 7th of November from 10 to 10:30 EST. If you'd like to register for that, please go to lpc.com.au/courses and you'll find all our events available there, and you can register. Yeah, we wish you all the best with future-proofing your office leasing accommodations in Adelaide. Have a good day. Thank you.
Thanks, everyone.